Yo, what is good, YouTube? We are back with another video. I was getting DMs on Instagram about what the time frame alignment was because I mentioned it in another video, but I figured I'd just make a separate video going straight over the time frame alignments for market maker models. Now, I will be going over every single one of these except the 15 to 1 minute because I don't trade the 1 minute. Just go back, test it, and you'll see for yourself, hey, this works out because price is fractal, so it does the same thing on every single time frame. But if you're not in the free Discord, go join it. It is linked down below. But time frame alignments, we do monthly to daily time frames, weekly to 4-hour market maker model, daily to 1-hour market maker model, 4-hour PD array to 15-minute market maker model, 1-hour PD array to 5-minute market maker model, 15-minute PD array to a 1-minute market maker model. So all of these on the left are your PD array that you want to see get tapped, your point of interest, and then a market maker model will follow on the right side of the chart, right? Yeah. So let's get right into this. So first off, we will just go straight to a monthly time frame on NASDAQ and NQ because we saw this happen in last month of May, which was 2 days ago. So what do we see right here? Right? We see internal liquidity. We see that we have tapped into internal range liquidity. And if we are going to hold that, external becomes the next draw. So right here becomes your external level, internal to external, right? Every market maker model starts off with an original consolidation, right? If you can't find the original consolidation, the market maker model is probably not going to be a quick or good one or a good setup opportunity. So if we head down to the daily time frame, because time frame alignments, what do we see right here? We see a consolidation. Sorry, I couldn't even think. We see a literal consolidation, a huge consolidation up here on NASDAQ, right? Right here is where we tapped into that internal range liquidity, right? And what's another thing you want to be looking for whenever we tap into that higher time frame key level? SMT, right? And if we take a look right here, this is where ES and NQ had a fat SMT. If we go right here, we can see ES has never taken this low. ES did not take this low, right? And that is key for a market maker model. So we see an original consolidation, which is up here, all of this price action. You can literally just mark off all of this. We have an SMT, and I'm pretty sure, if I'm not mistaken, we do create another SMT right there at that swing low. Right, so right here would be first stage accumulation in this tiny fair value gap. Right, we have a fair value gap right here. So we come down into it and then we take off. Right, so what's this? This would be your what? Market maker model, internal liquidity to target this high. Right, this would become your external level, right? So fair value gap, we have an SMT. Let's go down to the 1 minute, or the 1 hour, sorry, right? And what do we see right here on the hourly time frame? We see a consolidation, right? So we just did, right here would be your consolidation. Right here, we have that SMT, right? Monthly, internal to external. Now we have a daily internal to external. We have our SMT, right? So right here, what do we see right here? This would be turn into your breaker block, right? Because we never tap into this fair value gap. So we have a breaker right here. Breakers can resist price to stop going into a fair value gap that is lying lower, right? So up here we have our breaker. Right here we have internal. But this breaker can hold us to send us higher without needing to tap into that internal range liquidity, right? So right there is your higher time frame entry to target this external level. So right there you saw monthly to daily, and then a daily PD array to a 1 hour market maker model. It's that simple, right? And you always want to be paying attention to those SMTs, right? So if we head down to the weekly chart, right, I never I haven't went over any of these examples, so I'm just kind of freeballing this. But if we take a look right here, what do we see right here? Internal range liquidity, right? Internal range liquidity. Right here, internal range liquidity. So we'll go over both of these. External becomes the draw. External becomes the draw. So right here, we'll go over this one first. What is it? Weekly to 4 hour. So right here we have that first 4 hour draw right there. What do we see up here? An original consolidation right here. So we see that original consolidation. We have tapped into weekly internal, right? And we are pairing orders beneath an old low. Maybe look at that. Standard deviations line up perfectly with this original consolidation. So, where's market open? Right here is market open. What do we see on the 4 hour chart? Right, we see internal range liquidity. So, right here is a fair value gap. What becomes the draw? Right here. External range liquidity, right? So, we are bullish on the weekly. Weekly internal to external. Right here on the 4 hour, 10 a.m. A swing low created inside of a PD array gives you high probability setups. So we are trying to frame a trade off of this becoming a swing low. Right here, we are framing a trade on this candle, predicting that this is going to turn into a swing low. So if we head down to what? The 15-minute chart, 4 hour to 15-minute. Where is it? Right here. What do we see up here at this external level? An original consolidation. So, internal range liquidity to external range liquidity. Right here is your external level. Up here is your original consolidation. So, right here on the 15-minute chart, what do we see? Displacement above a swing high. Displacement above a swing high. This turns into your breaker block right here. We have closed back inside of this candle. That means this fair value gap should get filled out. Right here, fair value gap. Right here, breaker block. Right here becomes a high probability setup. What time is it? 10:30. 10:30, we deliver straight to that external level, right? This is how you're starting to frame high probability setups, right? Right here. We have tapped into that weekly internal level. We are thinking that this, where is it? Oh, this external right here becomes the draw. But intraday trading, we're not going to be taking longs here to target this high right away. That's why you want to hit that internal level or a higher time frame key PD array to target that external level right here on the lower time frames. So you see, whenever you align these biases, right, we're bullish on the weekly, bullish on the 4 hour, and then we get that tap into a PD array to target that external, drop down to that 15 5-minute chart and target that external level. So you saw how I did that right there, right? And then we deliver to that original consolidation up here, right? So going to this up here, right? Weekly internal right here to external. So we're inside of that key PD array, that weekly fair value gap. What do we see up here? The consolidation isn't as pretty, but it is still a consolidation, right? We're not really displacing out of the range. Right here can be your smart money reversal inside of that key PD array, that weekly fair value gap, and a delivery straight to original consolidation right up here, right? Right here, where's 10 a.m.? 10 a.m. That won't be a pretty setup because this candle, actually you probably could get a setup on that on a 5-minute chart right here. So 4 hour internal range liquidity. Let's drop down to the 15-minute. Up here becomes that external level. External level. The 15-minute really just offers that right there. I wonder if we have an SMT here. We'll go to ES1. Oh, no. Okay, right here. Yep. Okay, perfect. This is where you don't need that market structure shift. We have what? An SMT with this low right here. This fair value gap is going to send us to that external original consolidation. We have that original consolidation right here. And what's this look like even more so of? A power of three. Accumulate, manipulate, distribution higher. Right? And if we mark out that midnight opening price, right? I haven't been doing that because I'm just showing you guys time frame alignments right now. What do we see? Well, we kind of see a double purge, right? We stop out all these buy stops, manipulate lower below midnight open inside of that key higher time frame PD array, distribution higher. Right here is your entry. Now, if we head down to the 5 minute, if I can I? I can't go down to the 5 minute. But anyways, right there is a beautiful setup, and you saw how I framed that just off weekly. Let's get rid of all this. Weekly internal to external right there. So you guys are starting to see how all this makes sense. Now, heading down to the daily time frame. Let's get out of replay mode because I'm going to go over this example because it kind of just happened, honestly. What do we see right here? Oops. Internal range liquidity. External range liquidity becomes the draw, right? And what do we want to be doing? We want to be anticipating a swing low formation. What's this candle do? It closes back inside of this candle's range. This third candle should distribute us up. And what do we see on the hourly time frame? An original consolidation. So you guys are seeing how this is all starting to fall together, right? Right here becomes that original consolidation. 10 a.m., that's 9 a.m. Well, right here we have a fair value gap. So, internal to external, which would be this high, but we already know this is the draw, and I'm pretty sure this is high impact news. That's why this 9 a.m. candle is really big. So if we head over here, yeah, this is just straight distribution. No SMT. ES gave you that tap into this fair value gap. All right, we have a market structure shift. NQ never taps into that fair value gap, so you don't really get an entry until all the way up here, but then your risk to reward is skewed. So this unfortunately did not give you an entry. My mouth is getting dry. But it is what it is. You didn't get an entry, right? So we move on. Anyways, you guys saw how daily internal to external, that 1 hour consolidation. So heading to the 4 hour. Right here, this happened on Friday. What do we see? Internal range liquidity. Right here. What do we... this low was taken out before, so this would become your draw. But once I go down to the 15 minute, you'll see it's a huge consolidation anyway. So internal to external, right? But unfortunately, the 15 minute never gave us our entry, right? And like I just said, this all just becomes your consolidation, right? Power of three, accumulate, manipulate. We actually have a double purge as well. Purge sell stops, come up purge buy stops inside of that higher time frame key level. So this becomes a high probability setup. But if we go to the 5 minute chart, this is where, right, you can take entries on separate time. They don't have to be perfectly time frame alignment. It just helps identifying that original consolidation, right? You don't have to take entries on that 15 minute chart, but identify the consolidation on that 15 minute chart, right? So this is the entry that was given before this was delivered. The only entry that was given. We form an SMT at this high. Boom. Inside of what? A key level, which is that 4 hour fair value gap, internal to external. And then we have it inside of this 5 minute. That is your only entry. As you see, we just have distribution straight down, and then we just literally go straight down. So that's pretty much the only entry on that day. Now let's go to This might give us an entry. Thursday, or wait, that's Friday. Thursday, let's go to Thursday because we see internal range liquidity, right? We're going down in time frames now. So this is going to be 1 hour to 5 minute. What do we see? Imbalance. So internal in what? Swing high. Boom. Inside of what? Premium, right? We don't just tap into that fair value gap. We go up into a premium, right? And also negative order block. So we have two key PD arrays aligning right here, internal to external right here. So heading down to the 5 minute chart, can we identify that original consolidation? Yes, we can. Let's get rid of this. We have an original consolidation right here. Consolidation, buy side of the curve, then we drop down into sell side of the curve. Look at the 5 minute chart. We pretty much perfectly respect this order block. Now let's get rid of that. Now, do we form an SMT? Because I'm pretty sure we do. Yes, we do. SMT at this high, right? But if you don't want to take an entry because there's not really a market structure shift yet, right? This is just going to give you your first stage low risk sell. So fair value gap, SMT, then we displace through this swing low and all of these swing lows. What's this become? Your negative breaker. So we have a breaker paired with what? Order block. Why is this an order block? Both of these candles become your order block because these two up close candles traded into a key PD array, this 5 minute fair value gap, and a fair value gap. The three best. If you have these three lined up, oh bro, that trade is gonna pay, right? As you see, we deliver down, but right here becomes a good sell, and if you miss that, you are given one more chance to sell before that external range liquidity original consolidation gets delivered. We'll go over a 15 minute to 1 minute. Why not? Right here. I don't know if this actually works, but do we come down to a discount? No, we do not. Anyways, we come down into this internal range liquidity. What becomes the draw? This external range liquidity, right? So internal to external, I actually don't have, oops. Internal to external, what do we see right here? An original consolidation. Boom. Consolidate, then we head lower, tap into that, then what do? We pair orders beneath this low. That's key. Pairing orders inside of a key PD array right below this low. What happens? Do we actually get a tap into here? What's the low of that? 321.75, 320. We get an IOFED right here. Tap it to the tick. We create equal highs. You know, equal highs like to get targeted, right? So right here, if I wouldn't take an entry here, I'd wait to see if this holds and then take the fair value gap that gets displaced out of. So I'd be looking for an entry right here. So right here, boom, boom. This would be a good entry to deliver to that external level, right? Original consolidation, sell side of the curve, pair orders inside of an internal higher time frame key level, buy side of the curve, create equal highs, target those, displacement out of this discounted PD array, right? This is discount, this is not, right? Honestly, before I would take entries off this fair value gap, but discount to premium helps a lot identifying what fair value gap should hold. So down here, this discount, displacement out, this definitely is going to hold. I mean, this is going to work 9 times out of 10. Beautiful setup right here on the 1 minute chart, right? So you guys, I just gave tons of examples on time frame alignment. I don't think I missed any. I did monthly to daily. I did weekly to 4 hour, daily to 1 hour. Yeah, I did all of them. So yeah, my mouth is dry. I'm going to get out of here. Hope you guys enjoyed the video. Drop a sub, drop a like, and join the free Discord. I'm out of here. Peace.